You don't even need to have interest rates rising. You can have the Fed here saying that interest rates will stay at record lows for the next few years, and bond prices are now going down.
Well, I mean, it's difficult to tell what will happen. I happen to believe that eventually we'll have a systemic crisis and that everything will collapse. But the question is really between here and then. Will everything collapse with Dow Jones 20,000 or 50,000 or 10 million? Mr. Bernanke is a money printer, and believe me, if Mr. Romney wins the election, the next Fed chairman will also be a money printer. And so it will go on. The Europeans will print money, the Chinese will print money, everybody will print money, and the purchasing power of paper money will go down. And I don't like bonds. I don't particularly like equities, but I think equities are a better space to be in than bonds.
So yesterday's move by the Fed then has you doing what, Mark, with your portfolio? Because you do own bonds in your portfolio.
Yes, I own corporate bonds, and I recently, as I wrote, I bought some bonds from Kazakhstan, because Kazakhstan economically is a much sounder country than the United States or any European country. But it's in small doses. I wouldn't put all my money in corporate bonds. They have an equity character. I also own equities still in Asia. And as I pointed out already 4 months ago, for the first time in my life, I bought equities in Portugal, Spain, Italy and France, because they were unbelievably distressed. I think what people overlook today is they look at markets, but they don't look at what happens within the market. So over the last 12 months, 18 months, the US has massively outperformed European markets, Asian markets, with
Yes.
a few exceptions. And now some markets are relatively depressed. I could argue the Chinese stock market is now relatively depressed. So the asset allocators may move some money also into Chinese stocks, and then they can rally 10, 20%. The fallacy of monetary policy in the US is to believe that this money will go to the man on the street. It won't. It goes to the Mayfair economy and the West 15 economy of the well-to-do people, and boosts asset prices of Warhols, of West 15 condos. Sandy Weil sold his for 88 million.
But
now your listeners can buy one for 95 million.
Right, but
very happy, very good for the Fed. Congratulations, Mr. Bernanke. I'm happy my asset values go up, but as a responsible citizen, I have to say the monetary policies of the US will destroy the world.
You said that you believe what the Fed is doing, printing money, is going to destroy the outlook for the United States. That is some pretty heavy criticisms coming out from you, even for you on the Fed. But tell me exactly what you mean by that. I mean, you know, is there not any credibility for the Fed trying to bring down the unemployment rate, trying to help the housing market? The Fed has been seen as really this lender of last resort.
I think there is a huge misconception and fallacy that money printing can actually improve the rate of employment, because the money flows down into the system. It goes first into essentially the banking system, into financial institutions, into the pockets of well-to-do people. And say, if you drop money into my pocket and you have at the same time increased government involvement in the economy, and we have the government growing with its regulation and legislation that stifles economic development, I don't want to build a new business, but what I may do is look around the world, where are distressed assets? So I will go and buy existing assets, takeovers, But takeovers don't add to employment. They
Marc,
destroy employment. Secondly, I'd just like to mention one thing. This money printing business. They have been saying that for the last 15 years, that bailing out LTCM was necessary. Then they said, oh, the Nasdaq collapsed after March 2000. We need to create another bubble. Let's print money. What did they do? They create a gigantic credit bubble and the misery that we have today.
I want to get to some other subjects here to talk about. Namely, given this Fed action, tell me where you see, for instance, gold prices headed. How is that going to increase commodity prices?
Yes, I'm glad we're changing the depressing subject of central banking nowadays, especially in the US. And since you asked me, why could I make such a statement? You look like 21. For sure you will know during your lifetime why I said it. That will happen. But about gold, I think the trend for gold prices will be steady, but the trend for the dollar and other currencies will be down. So in other words, in dollar terms, the price of gold will trend higher. How high it will go, you have to call Mr. Bernanke. And at the Fed, the other people that actually make Mr. Bernanke look like a hawk. And so they're going to print money. And they've done it for ages already. And where has it led? To record high unemployment, essentially since the Great Depression, and structural unemployment. And if employment goes up, it goes up among low-paying jobs, not high-paying jobs. So I'm telling you, in my view, you ought to own some gold, but don't store it in the U.S. The Fed will take it away from you one day.
All right. And, Marc, I think you did give me a compliment there where you said that I look 21. So you know what? At this age, I will take my compliment any way I can get. Marc, just quickly, you did note, though, that property prices here in the United States may be at attractive levels. Would you buy property here? Just give me a quick answer.
Yes. Property prices in the south of the U.S. are very, very inexpensive compared to property prices around the world. The tragedy is that the people that were evicted from these homes, they have no access to credit, they have no money, they can't buy them. So, with easy money by the Fed, well-to-do people, investors can buy these properties and then let them out to the people that were kicked out of these homes. What a great achievement of the Fed. First they create a property bubble and destroy the wealth of poor people, and then the poor people have to rent, and the rents in the US have been up 9% over the last 12 months.
Marc.
In San Francisco, up 15%. What a great achievement. Thank you, Mr. Bernanke.
All right, Marc, on that note, I'm going to have to leave it there. Always great to have you. Would love to have you back on again. Marc Faber, the author of The Gloom Boom. And